Good day, YouTube. This is Jay Money with Falling Forward Financial. Just come across this 3 picks that are worth buying if you're new to investing. So, a lot of last 2 years, there's a lot of new people new to investing, whether they're doing it right or wrong. And there's probably some people that's been investing for 2, 5, 10, 20 years that might not be doing it correct, but just thought I'd throw this out there and see who has these, and some of you might think these are worth buying. So, first, owning an index fund is a great way to get market-like returns with very little effort or cost. Coffee is also a widely beloved beverage that people are willing to pay a premium price to get, or just the way they like it. Everybody has to eat right, so in virtually any economy, there's an appeal to getting food quickly and relatively inexpensively. And as you can see, this just came out on the 17th, so we'll go over that and see who out there has these. With those perspectives in mind, we asked 3 experienced investors to make a selection appropriate for new investors to consider. They picked Starbucks, SBUX, McDonald's, MCD, and Vanguard Total Index Fund, ETF, VTI. And we'll go ahead and read on to find out why. So, a company with straightforward business that commands a premium price. You can see what they've done here over the last month. So, could have got in there about the 73, 72.50 range. Went up, fell back, just kind of stair-stepping up. Currently at $83.27, $95 billion market cap. Days range 81.89 to 83.47. 52-week range of 68.39 to 126.32. So pretty much almost doubled there. Volume of 6.8, average of 8.1. So for me, a good beginner stock should be a company familiar to investors, ideally the general public too. The business should be more or less easy to understand. So, and Starbucks is definitely an easy one to understand. It's a company that satisfies all the criteria, years of aggressive expansion behind it. The company is nearly ubiquitous, almost an American municipality of any size, and also has a presence in select markets abroad. Company's single-minded mission in life is to sell coffee and, to a lesser extent, other beverages, food, and snacks. So, if you like Starbucks, you can list that in the comments, and if you like coffee or tea, I guess you can list that as well. So I'm more of a tea drinker myself. The high demand for the company's ever-increasing footprint have put some real caffeinated zip into the fundamentals. Despite a hiccup in the fiscal 2020 due to the pandemic, annual revenue has been determined to march higher, just under $22.4 billion in fiscal 2017 to more than 29 4 years later. So you can see the growth that this one has had. Profitability is choppier, but it's usually strong regardless. Fiscal 2021 has almost $4.2 billion. For example, Starbucks has managed to squeeze out a few bucks in the pandemic, earning $928 million on the bottom line. Over this and the next year, meanwhile, analysts and collectively expecting further growth in both revenue and net profit. And there's that shareholder dividend. Starbucks currently pays $1.96 per share annually for a not bad yield of 2.5%. Starbucks is a fine entry stock for investors. Indeed, it's not only a convenient spot to get your morning Java fix. And next we have McDonald's. They have an excellent performance. If you haven't watched, I think it's The Founder. It's about Ray Kroc. It's got Michael Keaton in an awesome movie. It shows how the Ray Kroc pretty much took over McDonald's basically stole it, if you will, from the the two brothers. But just a really fascinating, interesting movie. Again, that's the Founder. So if you haven't watched that, I'd recommend it. I think it's on Netflix. But over the last month, they've went up from about 240, fell back a little bit, on up to about the 250, 250, and on up to 255. Currently at 254.58. $190 billion market cap. Days range 253.47 to 256.91. So about a $3 swing in there. 52-week range of 217.68 to 271.15. So a little bit of appreciation there. So volume at 2.1, average volume at 2.7. And again, one of the favorite picks for new investors, the international fast food chain is coming out of the pandemic reinvigorated. Revenue and profits are soaring, while adjustments made during the pandemic could sustain those increases for several years or more. So they struggled with the pandemic onset when government restrictions forced it to disallow guests from dining inside. As a result, revenue fell 10% in 2020. Management skillfully adapted to the new operating conditions by emphasizing digital sales. Customer orders for delivery pickup and drive-through exploded, and McDonald's revenue bounced higher by 21% in 2021. So they reported a record at $10.04 in earnings per share in 2021, a whopping 59% increase from the year before. So you could have had a good dip by there and had some growth. But the newly formed delivery capabilities expand the reach of each McDonald's restaurant. It could also increase the frequency of customer purchases, whereas a customer may have previously only purchased McDonald's on their commute to work. They might add a weekend delivery order to the mix. Here you kind of see a chart of McDonald's, so the PE ratio. So low-cost menu items could be also attract more customers as inflation forces households to prioritize getting more bang for their buck. Good news is that the new investors can buy this excellent stock at a fair price to earnings ratio at 26.7. McDonald's has sold in the previous 5 years the average price. So next is a VTI. It's a Vanguard fund ETF. I don't really talk too much about ETFs other than some MJ ETFs that I've went over. Those are probably due for an update as well. But currently at 198.11. Here you can kind of see what they've done. It's kind of up and down, about $5 or $6 drop off, and it's kind of a yo-yo there. So days range of 195.99 to 198.75. 52-week range of $181.67 to $244.06. So that's quite an appreciation there in the 52 weeks. Volume of 3.3, average volume of 4.4. One of the best strategies for beginning investors is also one of the simplest. Buy an index fund over the long haul. You'll get returns that are coming very close to the underlying stock, less at a very modest fee. In case of the Vanguard Total ETF, fee is virtually invisible at 0.03. So that's another thing you have to watch with these ETFs. Some of them have the fee, some are more than others. But if you want something really safe and that doesn't bother you, so you still might want to consider some of these index funds in the Vanguard group. So again, I don't give tax, legal, or trading advice, just state my opinion. So, but Warren Buffett famously won a $1 million bet by betting that a simple index fund would outperform a basket of hand-picked hedge funds over the course of a decade. So the beauty of the approach is that the long-haul index investing quite frequently beats funds managed by Wall Street's best and brightest. So, and then he placed a bet. So I did this in a M1 Finance. I picked, I think, PayPal and some aggressive stocks, and just did some ETFs, Vanguard, and Oh, I've had it in for 2-3 years, but the growth stocks did far more than what the Vanguard, but I think Vanguard has passed them up. They were even there for a while, and so it's been kind of interesting. I did it just a kind of an experiment, and so kind of watch it every once in a while, but I haven't watched them as closely now, so it's in an M1 Finance. So I did that, put $100 in each, and bought about 4 growth stocks and $100 worth of Vanguard, so VLO and VTI and a couple other ones, and so just kind of an experiment. So you should try it yourself in an M1 Finance. So it's kind of interesting. So, but that is 3 picks. If you have any of these, you can go ahead and list that in the comments. Again, Starbucks, Vanguard, and McDonald's. So SBUX for Starbucks, McDonald's is MCD, and the VTI on the Vanguard Index Fund. So if you have any of those or any Vanguard funds you like better than this one, or any other 3 picks, you can list that in the comments. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is Jay Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.